We're going to be looking at a trade that occurred on the 23rd of May in the Bunds. So this was a couple of weeks ago. And the pattern that we're going to look at the execution of is an inside day break. So just getting straight into it, looking at the profile, we can see that the inside day occurred here, and this occurred shortly after Bund had broken out of a consolidation area towards the lows, and we had two big up days, largely on the back of some of the risk off as a result of the political tensions in Italy. And we had a very big day, consolidated towards the highs. This is on the Monday, and then the Tuesday we opened and traded within the prior day's range, having two tests lower, trying to see if we could move back down and retrace and fill in some of these single prints. However, just moving to the 60 minutes a bit clearer. You can see this was the original up move, and then we have a move lower on the actual inside day and two attempts to move lower, and then closing about mid-range on the Tuesday. So we're just going to be looking at how the trader executed towards the highs of the day, as he executed through the break, and just looking how he positioned for this. There was quite a bit going on this day. We still had some continued risk off with BTPs pushing lower, and a lot of hedging being done in the Bunds, and in combination with this we had some European PMI data coming out. So we'd had a French miss on the PMIs at 8 o'clock, and where we're going to catch up with the price ladder is just before the German result is announced at 8:30, and we're going to see how this trader used this data and this confluence of both the structure, the pattern, and the risk off to really play through this level and take advantage of the pattern that's offered to us. So just before I start, one thing that we need to talk about with regards to the inside day break, because it's such a common pattern, not a common pattern, but such a visible pattern, there's so many eyes on it, that it can often be quite difficult to execute on. These relatively obvious patterns a lot of the time are subject to very deep squeezes, and can mean that your timing of your execution is imperative to really either be in early, or once you've had that full confirmation and you're ready for the break to take place. And really just going into the trade understanding that you might not be able to deploy your full size until you get that real confirmation, because what you don't want to be caught is holding offside with your full size, knowing that the trade's going to play out. And a lot of the frustration with this pattern does occur because it's very clear, very often plays out, yet it's quite hard sometimes to get on. So let me just jump straight into the video, the recording. So we can see it's 8:28. We've had a miss on the French PMIs at 8 o'clock, as I said, and we're just waiting for the German PMIs to come out now, and the trader's just getting ready to execute through. I think we've got the inside day. Just let me check. One second, apologies. So the inside day break comes in at, I think, around 45s, and the mother candle comes through at 50s. So looking to play through those 45s and up to the break of the mother candle, and potentially higher if the price action offers that opportunity. So let's just watch what happens on the 8:30. One thing we've got to be aware of is we've had quite a big move out. We've been one time framing on the 30-minute, broke out the IB, pushed higher, So far, everything's pointing towards upside. So any miss on this number, you can see traders immediately executed at 8.30 on a miss. Fed is clipping, first half clip at 37s. The next one comes in at 40s. I'm just going to pause this. So on the number, we've had a miss, half clipping straight away. But again, just being aware that the fact that we've already had a move up on the miss on the French data, what can happen is on the subsequent release, those traders that are long may use that liquidity to potentially cover their long positions, and sometimes you can get a very quick washback on the data. So just wanting to make sure that you don't get the trader hasn't been caught with full size on getting pushed back and going offside and not being able to hold through the initial flutter before that move and playing through that 45s area. Okay, so we're seeing bigger clips pushing up higher. We've already done maybe 3,000 lots towards the highs. Straight away he's got another clip in, so he's in with 40 lots. And now he's just looking to see, he doesn't really want to see a trade below, sorry, I'm having to slow this down a bit. It's a bit fast. So just slow this down a bit just so we can keep up with the pace. So we're seeing a low volume node here at 39s. He's got his average price below the inside day high, which is around 44s, I think we saw. So it's got a relatively good entry in this position. And he's just looking to see the momentum continue and trading up through the inside day, or the mother candle of the inside day, I think around 50s. Now, something also to bear in mind is we had some really big levels up towards the 69s area. It was the high of a 2-week consolidation area throughout the start of April. And you want to make sure that you stay with this trade just in case we do start to flush through. So first off, he's on side, he's got a good average price, he's now built his clip up to full size to 60 lots, and as long as he's seeing the churn towards the highs and taking out the highs with big clips pushing up, looking to stay with this trade and look to see it play through those 50s and potentially up towards that 69s area if the price action is conducive to that. So we're just trading up to the mother candle high now at 50s. Price action just started to slow down a little bit. Still seeing the bid reloading at 47s, just took 300 lots there and reloaded. But just starting to see a bit of a slowdown in the size of the clips that's hitting up into the highs. Only 1 lots, 2 lots, 47s reloaded again, but it's taken 47s offered. So, at this moment, just thinking, let's potentially scale out of a little bit. We don't want to be caught holding full size all the way back through these 42s, through your average entry price. Now just really trying to establish a range, a rotation that you can work with and really define your risk and know where you're going to be wrong in this trade. As I said before, the last thing that you want is to be caught out, getting squeezed out of the trade that you've planned for, only to go and watch it power on through the target levels. So just going to put it back up to full speed now. So we're starting to see a bit of volume done in this sort of area. Again, just being prudent to potentially scale out a bit of his size. We didn't actually get filled on that 10 lot. And we're still seeing quite a bit of churn in this area, but still above the prior day's high, the inside break level. So as long as we're staying above here, you've got to be quite confident that we should at least take those 50s and complete the pattern. And you want to stay with this trade. At the same time, just to notice that the euro had been pushing lower, I believe. So we've got cable on the lows, euro on the lows, but all the other bonds, aside from the BTPs, which, as I said, with the risk off going throughout Europe, seeing the BTPs through the lows and the shats and the bobble up through the highs. You know, you're really wanting to stay with this trade. Everything's pointing in the right direction. There's no need to get out yet. So just seeing there, we've just seen 3-4 prices get taken out, go bid over, and now 46 is reloading. So really want to see this level start to hold around 46s and really start to push and take out these highs. So we can see here, so we've now taken the inside day break mother candle. So in effect, we've completed the pattern. So what we now want to establish, or what the trader's looking to establish, are we going to play up through these 54s and 55s and towards those big levels at 69s, around that sort of area for a big break? Or is it potentially going to take some time and you might need to manage the trade and maybe sit back and look for a re-entry at a later time once we've built a little bit more structure, ready to take a break of a level that's that significant? So we're still seeing some churn at the highs, but all of a sudden we've rotated back down, and just again being a bit prudent, just to take a little bit of size off the table, and want to see these 53s taken out now and more size being hit into the highs. You can see he's establishing some targets higher up through the 60s and 63s. So the mindset of the trader is still very aggressive. He's still looking to see this play through and really attack those levels further up. Now we've seen about 800 lots trade into 53s. You really want to see the volume and the churn stay within the rotation of maybe 5 or 6 ticks. And you want to see the rest of the bond space and the correlated markets stay at their extremes and keep pushing beyond. So we're just seeing now, again, we're seeing 52s. There's quite a large offer on here of 850 lots. We want to see how that accepts some bids. What we've actually seen is it's not really been anything to challenge those 52s. We're now seeing a bit of size come down. The books start to thicken up around 51s, 52s on the offer. And not really many huge clips at the moment pushing into 51s. We had 20 lots, 21 lots, I think. And just starting to reload lower on the offer now. So 50s has been taken out and reload. There's a bit of a battle going on around this 50s area. 379 lots lifted into 51s and now reloaded. But this 54s area, I think 600 lot, not sure if it was taken or if it was pulled or not. Sorry, we've just broken the highs. So again, we're continuing to move towards the first target of 60s. Still seeing the churn and just want to see those big clips continue to hit into the highs and taking out prices, and the bid also reloading and holding. Starting to build a bit of volume, a few thousand lots here, which you'd like to see hold. You don't really want to see this start pushing back too close towards your average entry. If this trade is to play out and to carry on going, we really want to see it in a perfect world, hold above 50s, rotate here and break higher, and potentially go on from there. Okay, so just still seeing 100 lots lifted in 55s, broken the high again, or sorry, into 54s. Only traded 300 lots at the high this time. So each time we're breaking the highs, we're now, it's just looking like there's just a little bit less energy and the offer's just getting stronger and stronger. We've got this 600 lot around 53s again, still holding this price. We really want to see these 53s get taken out, as we have there. It's gone a bit over, and again push back down. 53s is holding. So there's a real fight here over these 53s. Offer keeps reloading. There's buyers keep trying to take out that price, but we've not as of yet been able to hold. So the trader's again taken another 10 or 20 lots off the table, is now holding half of his initial maximum size, and just trying to stay with this trade for as long as possible. You really want to give yourself a chance to stay with the trade long enough that if we do break through this area of congestion where there is quite a lot of reloading on the offer going on, quite a lot of selling going on, you know, we could see some real kind of, you know, some scrambling to get out of these short positions, which would look for a swift move up through these 55s, 56s. But again, 53s now still holding, and the trader's just looking at scaling out some smaller clips. You know, it's now starting to reload lower. We've gone from reloading 54s down to 53s, and now at 52s the offer's holding. I'm just starting to see a bit of a slowdown in velocity. The size of the clips isn't really as big as before. You know, 51's still doing a good job at reloading and absorbing whatever's being pushed back down, but not a huge amount being hit up. We just saw 240 lots there lifted into 52s, but straight away 52s went offered again. So just with the execution, just being quite nimble and quite subtle with taking a little bit of size off the table as you're given more information that doesn't necessarily fit your overall plan or ideal scenario of blowing through this area and going up towards those 65 levels. So we're still seeing 53s reloading, forming a nice volume bubble here, and really now you're starting to think you don't really want to see us rotating too far below 49s, 48s. You can see the book starting to thicken up again on the offer, and just not really the best signs as of yet, that we're going to rotate and have another push higher without maybe collecting some more positions. So you can see quite a bit of volume going through, just reloading lower and lower on the offer. And again, the thing to take away from this execution is, as I was saying before, just, you know, let the price ladder and the price action tell you what to do with your size and how much size you should have on. There's no point fighting against what you're seeing. So as your idea is being less and less confirmed, you know, or it's being in conflict with what you're seeing in the price ladder, just try to scale out, take a little bit more off the table. The one thing that you wouldn't want to do is to see this go all the way back with full size, and you know you've missed out on where you were at one point. You know, 16 ticks on side with a pretty steady clip. So again, we're starting to see rotating with the offer has held and come down all the way from 53s to 47s now. So, you know, probably starting to think, how can I manage myself out of this trade? You know, I don't really want to cover at the very low of the rotation. So if we do come back up towards these 53s area, you know, we want to see either that push all the way through, but if we fail again, then, you know, you might have to take your winner, be very happy with it, and then reassess and look for another entry point to play up through those levels. So we're just seeing now 48 still reloading, coming back to 47s, and I think really we're not seeing enough come through, hitting at market, taking out those offers to really push higher. And again, euros come off the lows, BTPs also off the lows, starting to see a pullback in the bobble. So, you know, we're not pushing extremes at this moment. You have to really start to think, right, the momentum may have died out of this trade somewhat, and let's see, you know, still try to give it a chance, but let's see if we can manage ourselves out this trade. So we're coming back up to this critical area now, 52s, 53s, 54s. You know, we've got a high volume node within this area at 51s. Want to see it's gone bid, taken out, trying to reload, but the offer keeps stepping down. And I think at this point, as the bid really starts to run out of steam, the size of the clips really starts to reduce. The trader really takes this information on board and uses it to his advantage to exit the trade, I think, in this sort of area. So just seeing there, we've seen the offer come down 280 lots and now reloading into 51s and 50s, and the offer's holding more and more. So I think we'll finish it at that point. We'll just speed it up until the end. So we're still seeing 50s reloading, 50s taken bid. This is kind of the last chance for the buyers to really take control of this, and still struggling to get through this 51s, 52s area. So now about 15 minutes into the trade, you know, there's been plenty of opportunity and plenty of volume done here to really set a base to move on up. But there's still the reloading in this area, 50s to 53s, just seeming to be too strong. And as we start to trade down, reload lower and lower on the offer. I believe the trader exits the final remainder of his clip around 47s to 49s. So just to kind of sum up this trade, I think, you know, it's a confluence trade where you've managed to take advantage of, you know, the data that's being offered to you, the risk-off sentiment that's going through the European bond space, the technical structure, and really playing with the facts. You know, there's no reason to be selling this market, even if there was a big beat on the number, on the German figure. You know, I think the general sentiment would have been to potentially use that as an opportunity to fade the move off that and really still be looking to play long up and through these key levels. I just think the key takeaways from this is that, you know, as in order to play for these big breaks and to get size on and really take these 20-30 tick winners, you've got to be prepared to sit through a bit of churn and not be scared out of the trade too much. You know, make the clever choice and, you know, scale out of some of your size. You know, bank something so you can get down to a size that you can feel comfortable in sitting in a slightly wider rotation, but stay with the trade as long as possible. And just a good example of, you know, a fair execution of the inside daybreak, and really acknowledging what's going on in the price ladder, and using that to his advantage to make decisions as to how much size he wants to continue with, and how much time he wants to give the trade to potentially continue on and work out.